into January seasonally for gold prices. So there's reason to think we could still bounce back, turn the monthly candle green, and finish the year with a new monthly high for spot gold, a new quarterly high, a new annual yearly high, closing high for gold. And all of those things combined to turn the generalists onto the sector. I remember when this happened only once before in the 13 years I've been doing this, was at the end of 2010. Gold wrapped up, whether it was New Year's Eve or whatever day it was, on 2010. Gold finished that year, daily, weekly, monthly, quarterly high.
In the realm of precious metals, an intriguing narrative unfolds. Craig Hemke, a seasoned market analyst, has set his sights on gold, projecting a potential resurgence. With the monthly candle turning an enchanting shade of green, Hemke envisions a triumphant close to the year, marked by new monthly, quarterly, and yearly highs for spot gold. This prospect has ignited fervor within the sector, reminiscent of a rare occurrence witnessed just once in the past 13 years, dating back to the conclusion of 2010. Back then, a similar scenario transpired, leading to an impressive 25% rally in gold prices throughout the first 8 months of 2011. As the year draws to a close, the spotlight remains trained on the precious metals market, with anticipation building around Hemke's forecasts for 2023, poised for realization in the early days of 2024. Now we'll show you clips of Craig Hemke discussing his insights and experiences. Remember to watch the video to the end and check our pinned comment for some massive sign-up bonuses.
For the last 3.5 years, it's funny, there are, I don't know, I guess technical analysts, people that are permanently bearish on gold that sit there and they go, oh, look, it's a double top, it's a triple top, it's a quadruple top. Look, there's no such thing. I mean, there's a double top, there are double bottoms. Everything after that, you're just in a trading range, and gold has been in this range since, I don't know, August or September of 2020. I mean, clearly defined. It started out right at the end of November, at which point every short contract ever created was underwater at the close on Friday, December the 1st. So it's no surprise that it shot higher and then went right back down, creating that kind of ugly reversal candle. But I do think we are poised to eventually break out on a permanent basis. And when that happens, typically, again, in anything that's been a trading range, it generates headlines. Gold will generate its own headlines. Oh, look at gold now, above 2,100. And you'll get another rush of speculative money. Not maybe we won't go to 2,300 in a matter of days, but over a course of a couple of weeks, we probably will. And that's what I thought would happen at some time before the end of this year. And so since we're about 6 months behind schedule, I feel comfortable thinking that's going to happen sometime, before summer of next year. Now, it'll be interesting to see where we go from there. And I haven't fully thought that through yet. But anyway, back to the metals and where they are. As you and I speak, gold is up about 11% year to date. Anybody can cherry pick, date ranges. But if we just go back to 2000, this century, on average, dollar price gold gains about 9.3% a year. So, okay, we've had a slightly better than average at this point. The thing to watch, though, now, as we go into the last, what do we have left? 7 or 8 trading days, maybe? Maybe not even that many, 6. Anyway, the thing to watch. At the monthly close last day of November, gold price, the spot gold price, closed above $2,000 for the first time ever. Okay, that was pretty remarkable. And as I said, the very next day was Friday, December the 1st. The daily and the weekly chart closed at its highest price ever. December, typically pretty strong month seasonally for a number of reasons, which we can get into if you want or not. Just understand it typically is. This is a very strong time, December.
In the world of gold, prices held firm above the critical $2,000 mark on Wednesday, supported by growing anticipation of the Federal Reserve's potential interest rate cuts in the coming year. Concurrently, investors remained on tenterhooks for forthcoming U.S. inflation data set to be unveiled later this week. The spot gold market maintained stability at $2,040.69 per ounce as of 0914 GMT, while U.S. gold futures exhibited a slight uptick of 0.1%, reaching 2,053.90. UBS analyst Giovanni Staunovo attributed the market's cautious stance to a wait-and-see mentality, possibly intensified by the approaching holiday season, with market participants closely monitoring data that holds sway over the Fed's monetary policy decisions, such as inflation and employment figures. Like, subscribe and turn on notifications to get more videos like this. The November Core Personal Consumption Expenditure PCE Index Report, regarded as the Fed's preferred gauge of underlying inflation, is scheduled for release on Friday. Recently, the Fed hinted at the conclusion of its tightening phase and hinted at the possibility of rate cuts in 2024. The trajectory of these rate decisions hinges largely on progress in curbing inflation, as emphasized by Chicago Fed Bank President Austin Goolsbee. Nevertheless, certain Fed officials have expressed reservations regarding the soaring market expectations of impending rate cuts. These dissenting comments have contributed to constraining the upward momentum of gold prices, according to Staunovo. In a context where lower U.S. interest rates boost gold's allure, financial markets are currently pricing in a roughly 75% probability of a rate cut in March, as indicated by the CME FedWatch tool. Independent analyst Ross Norman forecasts a sustained positive tone in the short term, but envisions a substantial challenge to gold's ascent to await us in early 2024. Now, we'll show you the rest of the interview of Craig, where he discusses his gold forecast for 2024. But first, hit the like button and make sure to take advantage of our massive sign-up bonuses, as Bybit gives you free $20 just for creating an account so you can start trading real crypto today.
We're into January seasonally for gold prices. So there's reason to think we could still bounce back, turn the monthly candle green, and finish the year with a new monthly high for spot gold, a new quarterly high, a new annual yearly high, closing high for gold. And all of those things combined to turn the generalists onto the sector. I remember when this happened only once before in the 13 years I've been doing this, was at the end of 2010. Gold wrapped up, whether it was New Year's Eve or whatever day it was, on 2010. Gold finished that year, daily, weekly, monthly, quarterly high, higher than it's ever been. And I called it a superfecta, for people that are horse racing fans. And then what happened? The first 8 months of 2011, gold rallied about 25%, as this kind of general rush of funds came in. So let's watch that spot price, that gold price over the next 5 or 6 days, see where we finish up at the end of the year, and that might tell us a lot about where we're going the first half of 24.
How significant do you think was that close back in at the end of November?
Well, it got a lot of attention, right? Even Barron's Magazine, which comes out on the weekend, got note of it. I mean, when was the last time we had mainstream financial press about gold making new highs, Elijah? And that weekend of the 2nd and the 3rd of December, 3 weeks ago, they said, hey, don't even worry about buying gold. Buy some of these mining shares. So there was that little inkling of, we just roughly call it the generalist money, is just a sign of what I think could be to come when you look at those longer term charts. I mean, I'll sit here and I'll watch the intraday chart, the daily chart, and if you can close above this level and stay above the 50-day moving average and all that stuff is important. But the bigger money, not just, little old me, the people that run the hedge funds, that run the big family offices, the people that manage billions and billions of dollars, mostly have no gold exposure at all and no exposure to mining sector either. But when it goes out, you start making on the longer term charts, these new high, all-time highs. That's what get people's attention. The short term can, like you said, can go up and down. You get an ugly candle on the chart back on the 4th. That kind of kills incentive for a while. But longer term stuff, is what causes somebody that manages $5 billion to go, look at that gold, man. That's really breaking out. It's been consolidating for 3 years, and now it's breaking out. Maybe I ought to take, $10 million, $20 million and allocate it toward gold for the first time. That's the kind of thing. And so that's why, again, let's watch what is the weekly, monthly, quarterly, and annual close that's coming up here in a few days.
What do you think of Craig's forecast for gold in 2024? Post in the comments section your gold forecast for the next year, as it's very important to us to know your honest opinion on what the precious metals will do. Thanks for watching the video till the end, and I see you the next time.